Good morning and welcome to the Seven Figure Podcast. I'm your host, Thomas Edward, and with me today is Wayne Mulligan from Crowdability. You're the managing partner. You bring 15 years of experience to the financial space. Wayne, how you doing?
Pretty good, man. How are you?
I'm great. Thanks for joining me today. So we're switching up a bit. We've done a lot of editor podcasts with our own guys. We've now done about 3 or 4 podcasts with other financial veterans, people in the health space, people in more like technical trading space, Fidelity experience. You've been working on this awesome project in the crowdfunding space, and it's something really big that we write about a lot, and we think is going to be a big part in the next 10 years of financial investing. So tell us a bit about how you got started, like how you came about Crowdability.
Yeah, so it was sort of a combination of 2 different career paths that I was on in the past. So before finance, I worked in technology. I was a software engineer for 10 years, both before and during the dot-com boom. And building a business in that environment where this new industry was exploding and we were sort of on the inside because we knew about technology when very few people did, we were able to build a pretty big business in a short period of time. But then 2000 came along and wiped everything out. Mm-hmm. The dot-com crash killed the market. It killed our business. And it was sort of at that point where I was like, all right, if I want to be successful in life and as a business person, it's not enough just to know technology. I need to learn something about finance as well. Mm-hmm. So I went to work on Wall Street, focused mainly on the private equity side of the business. And so what that means is we helped, technology startups and specifically biotechnology startups raise money to get new drugs developed and get off the ground. So these were not publicly traded stocks. They were on the private side of the market. Did that for several years. But then ultimately went back to, left Wall Street and wanted to go back to building my own technology businesses again. Mm-hmm. And so myself and my business partner built a couple of different companies. Luckily, we were pretty successful with them, grew them to multi-million-dollar profitable businesses, sold them. And it was in that sale process where we came up with the idea for Crowdability, even before it was Crowdability. Mm-hmm. And our logic was, wow, we just made a bunch of money by having an early stake in a startup company that was taken over by another business. Mm-hmm. Much more than we made in personal income or from investing in the stock market. Do we go out and try to start another business or another couple of businesses and hope they pan out? Or do we just start investing in other people's startups and have multiple horses in the race? And that's what we did. And so we accumulated stakes in, now it's probably 60 different startups, worth next to nothing at the beginning, today worth more than $200 million. And once a new set of laws passed, these laws called the Jobs Act, which now allows for the first time in 83 years, individual investors to invest in startups on their own, we saw a big opportunity. We were like, okay, we could take all the research and all the investing experience that we have in the private markets, in investing in startups, and start to teach individual mom and pop, Main Street investors how to invest in this market on their own. And we think that's important because the returns there, they clobber the stock market.
Yeah, was the statistic early stage crowdfunding projects are like 40+%?
Yeah, actually 55% per year for the last 25 years.
That's amazing. Yeah. That's amazing statistic. So Crowdability, you personally invest in these projects as well that you promote to your audience, the people you're teaching?
Yeah, and to be clear, we don't promote any deals. We're not paid to write about any of these companies. We don't accept any outside advertising. This is a 100% objective opinion on a company. Mm-hmm. And we write the research from that perspective. And yes, we also invest in the companies because we believe in them so much.
Disclaimer.
Yeah.
Disclaimer language. Interesting you brought that up. So tell us a little bit about how you are sharing this awesome research with people. Is this a course? What kind of product do you guys put out?
Yeah, it's a good question. So we have a few different types of products that we put out. On the sort of entry-level path, it's a free newsletter. So if you just want to, sort of get up to speed on this market and learn what it is and how to actually make some of these investments, you can subscribe to our free daily newsletter. We publish it almost every day of the week. We have a few different types of issues that we publish. One is where we show you all the different deals you could invest in. Mm-hmm. We don't make any recommendations, but here are all the different opportunities that are out there. Mm-hmm. Then we publish a couple of educational pieces to give you some insight into how to actually navigate this space and start making investments. Mm-hmm. And then we publish just a roundup of big news and headlines that come out for the week. So that's the sort of the free, just get familiar with this space. Yeah. One step up from that is a course that we put together called the Early Stage Playbook. And this is a 12-hour online course that's soup to nuts. If you know nothing about early stage private market investing, you can take this course, and within 8 weeks, you'll be able to start building a portfolio of early stage private investments on your own. And then to help you do that, we have a series of premium newsletters that do sort of more in-depth research on each opportunity. So we'll publish a 40 to 50 page report on one company in a particular month.
Awesome. Yeah, and we sometimes write about some of your offers, which is great.
Which we appreciate.
Yeah, we have newsletter products as well. It's just interesting that it's a very similar space, but it's a completely different type of investing strategy, and we really like it. So again, thanks for joining me today. Tell me a little bit about what are some like key moments that you've had over the last couple of years building your business? What have really stuck out?
That's a great question. I think one of the things that both my business partner and I like the most about early stage investing and equity crowdfunding is you get to do well and do good at the same time. So you could do well financially, but you could also do good for your community or for the country. And so like to give you a good example of that as a highlight from the last couple of years, like I want to say 2-3 years ago, something like that now, we wrote about a company called Rewalk Robotics. And this was a company that develops robotic exoskeletons for paraplegics so they can walk again. One of my closest friends has been in a wheelchair since we were 16, had a horrible accident, 20 years. And this technology could literally help him stand for the first time since he was a teenager and actually take steps. So the fact that we were not only recommending this company to our reader base or subscribers and investing in it for the potential of a financial return, I was also doing something right by my friend, I felt.
Yeah.
And it worked out great for everybody. I mean, the company went public 11 months later. I think everybody got like a 400% return. And so, yeah, that's a highlight and one of the things that I think is sort of remarkable about this space that's unlike sort of investing in the stock market.
That's awesome. So we just did a podcast with Marissa Fair. She's a big health space for women's technology in like third, second world countries. A lot of different health space projects she's working on. She has leveraged crowdfunding. We touched on it a little bit. It's really cool just vibing off that. Like there's a lot of these opportunities available in this crowdfunding space that people can jump on, take advantage of that they probably would not realize existed. We're really excited to talk more about it too.
And I think one of the cool things is and I don't know if people realize this, like when you buy a share of stock on the stock market, like in a share of Google or Apple, you're buying that share from another trader, like from another individual investor. When you put money into a startup, it's going directly to the company who can then take that and make an impact with it.
Well, yeah, a lot of companies are propping up and needing a lot of this type of funding. So happy to be a part of it. What are some, how do you stay on the edge of finding these companies? Like how, are there groups that you go to, different meeting spaces that you're a part of?
Yeah, it's two big things actually, and this was very intentional from the day we started the company. We built out two core processes. First one was we built a network of investors who are either professional early stage investors or just active strategic angels who are either executives at early stage startups that have been successful. And we didn't just build that network, we recruited them to invest in Crowdability. So we got about 12 strategic individual angel investors to put about $2 million into our company at the beginning so they'd have a vested interest in us. And every single week, these guys are bringing us new deals. And these are hyper-connected people. So like one guy, for example, is Howard Lindzon. Howard was an early investor in Twitter, in Uber. Uber just filed to go public. Basically, Howard's going to turn every, I think, $1,000 he invested into about $20 million after the IPO.
Yeah.
So with guys like that bringing us deals all the time, vetting deals that we find, giving us their opinion on companies and management teams, that's a primary resource that we built out early on to sort of stay on top of stuff.
Awesome.
The second one was we built a piece of technology that we call our deal crawler. And this is an automatic piece of software that scours the web for new equity crowdfunding deals every single day, downloads information automatically on those deals, like the company's background, the management team's background, competitors, market size, compiles it all into a digital report and sends it to us. We then share that with our audience as well for free.
Awesome.
And so between those two things, our investor network and the deal crawler, we're able to stay on top of a lot of stuff with a relatively small staff.
Wow. Wow. Let's back up. Are you seeing any trends in the deal flow that you're seeing come through? Are there any new industries propping up that are sticking out to you like as something that you weren't expecting, or what's the trend in the market that you see in this space?
Yeah, so one of the trends that has just continued to grow, but it was there from the beginning, has been, you mentioned it before, sort of health tech and biotech. One of the first deals we ever covered was a biotechnology company called Beta Bionics. They're developing a bionic pancreas for diabetes patients. And that type of deal flow has only continued to increase. One of the big surprises we got, though, is in the last, I'm going to say, year and a half, we've seen a ton of marijuana startups, like out of nowhere. And some of these companies are obviously, no good, but some of them are amazing.
Right.
And we've invested in a few of those now.
Are there, speaking of the marijuana startups, you're saying like the no good versus the good ones, is there any trend you see there? Are the good ones more health focused, more in CBD type projects, or are they run the gamut of like retail versus?
Yeah, no, you hit the nail on the head. It means the best ones tend to either be health focused or infrastructure based, like companies that are going to provide a service like pickaxe and shovel play for the marijuana industry. Cool. The companies that are direct to consumer focused,
a little more risky.
A little more risky.
Cool. Awesome. Any other trends like that? You mentioned health and marijuana. Do you get a lot of tech deal flow come in, or any new tech startups, or is that kind of saturated?
Yeah, you see a ton of tech startups, but I mean, because you see such a high volume of them, it's difficult to sort of say which ones will succeed, but which ones will fail. So we try to look for sort of sectors that. The other thing you have to keep in mind is if it's a pure play software tech company and they haven't raised money through traditional means, it probably is a negative signal. It's probably saying this company is not worth very much and you probably don't want to look at it. However, when you look at alternative sectors that don't traditionally get funded by venture capitalists or angel investors, those are the companies that'll come onto these platforms and be very high quality, and it's just that they don't have access to traditional channels for capital. And that's why they'll use equity crowdfunding, and that's where you'll find value. So military tech, for instance, there's not a ton of VCs that'll back military tech.
Interesting.
Anything related to alcoholic beverages. Most people don't know this, but most venture funds in this country are backed by Saudi wealth funds, sovereign wealth funds, and therefore you can't invest in anything vice related.
Interesting.
So VCs are not allowed to legally back alcohol-related companies, gambling-related companies, marijuana-related companies. And so you'll see them come onto these platforms and go direct to individual investors as well.
Wow. It's good to know. Is there any, like you mentioned Saudi, is there any regions that are off limits? Are these all United States-based startups, or do you work in Canada, any other countries?
Most of them are US-based, some are Canadian, but even so, the investor doesn't have to be from America. They could be from anywhere in the world, generally speaking. There might be, depending on the deal itself, there might be country limitations, but for the most part, they're American companies that anyone from anywhere in the world can invest in.
Yeah, and these aren't like going on Robinhood or a broker and engaging with them that way. You and your platform explain how they can easily get involved and invest in these companies. I don't want to get too detailed, but do you just agree that it's very simple? Like the people can just engage pretty easily if they're partnered with like a Crowdability or a company like yours?
Yeah, exactly. I mean, you can't go on your brokerage account and buy any of these because they are privately held, but the websites that you do use to make your investment are dead simple. I mean, if you can buy something off Amazon, you could use one of these websites.
Awesome. So like credit card, $100 here and there. Awesome.
Exactly.
Yeah, that's something that is difficult, I think, just from listening to our readers' feedback, is that these new things, for how complicated the financial space is and investing can be, like options trading and some of the technical trading strategies, it's hard to really explain to people that this is very simple. It's just knowing where to go and where to get the great information.
Yeah, if you could do options trading, this will be a breeze.
Yeah. Cool. So that's awesome. And this is super exciting. I think like with Kickstarter, a lot of these new crowdfunding type platforms, it's now getting into the financial space. But you've probably been here even before Kickstarter, right? Like, have you seen any influence from these other platforms in your growth?
Yeah, I mean, Kickstarter was around before us, and Kickstarter is a unique animal. Kickstarter is known as rewards-based crowdfunding. Okay. So that means if you contribute to a project on Kickstarter, maybe you get a free T-shirt or a free version of that product once it's actually built. We focus on equity crowdfunding. So that means you own an equity or an ownership stake in the companies that you back. Awesome. And yes, we predate all of the equity crowdfunding platforms because we saw these laws sort of coming down the pike in 2012, 2013. We started the business then in anticipation that these laws would go live in the near future. Awesome. And so everything went live in 2016.
Awesome.
Yeah, so we've been covering the sector from the beginning.
How many deals do you think you mentioned, or I think early on, like how many you've invested in, but how many deals has your platform put out since 2016, roughly?
Thousands.
Thousands?
Yeah.
Wow, that's exciting. So there's always things coming in on a regular basis.
Yep.
Would you say, like, do you package your newsletters by deal flow, or do you get access to more deal flow with a different subscription, or is there any makeup that way?
The way we describe it is sort of if you're subscribed to the free newsletter, you get the fire hose. Like we send you as many deals as we find.
Wow.
And then as you upgrade, let's say, to the various newsletters that we have, we narrow that down to a very fine stream depending on what your interests are.
More research, more due diligence on your guys' part. Like these are like the cream of the crop.
Exactly.
Love that. But you still get all the value with the free, like just all the deal flow with your free newsletter, which is awesome. You're putting a lot of value up front first.
Yeah, if you had the time and energy, I mean, you could get our free newsletter and take our course, which is only $99, and you could do this all on your own. Awesome. Like there's nothing you would need from us if you had the time and the inclination.
Awesome. Cool. So I guess to backtrack, like you being in this from 2000, was there any other training or courses that you took yourself to get more educated on these things that could help some of our listeners?
Unfortunately, there's not a ton of research or education in this space because it really has been an insider network by law for the last 80 years. I mean, you had to either have a pre-existing relationship with a startup or have a net worth of over $1 million or more in order to invest in these companies legally up until this new law went into effect.
Wow.
So the people that were investing in them, it's less than 1% of the active investors in the country. They weren't writing articles and books on how to do this. There was just too small of a population that was legally allowed to invest in them.
Interesting.
Yeah, so you had to do everything through hands-on experience at the time.
Wow. So even just your personal growth, any people learn new to investing, want to just get started today? We have a lot of those subscribers as well. How would you give them advice to get started in these things?
Sign up for the Crowdability newsletter. Start reading, start educating yourself.
Well, that's a great note to end on, guys. If you want to learn more about Wayne and his business, head to crowdability.com. Wayne, thanks for joining me today.
Thanks for having me, man. I appreciate it.
Yep, this is fun.